Rock Daniels, the Bluegrass Realtor here. Now, the housing market is a critical component of the U.S. economy, and the recent earnings reports from companies like Lennar and Redfin provide a valuable insight into the industry's health. Now, while it is essential to consider the national trends, it's also essential to focus in and consider regional variations to have a more complete understanding of the market situation. Now, the Redfin Data Center has released information indicating that there may be some good news for the housing market. Now, after the decline in rates that we saw in January, there has been an uptick in the national median sales prices. However, it's crucial to remain neutral while analyzing the market's trends, and it's imperative for businesses to have a stable housing market to continue these good results. So it's essential to note that housing values have already corrected 15 to 25% in certain areas of the country. However, paying attention to this inflection point could lead to a more stable market, and the peak fear that many anticipate may not be as significant as previously predicted. But the Lennar earnings call suggests for a less optimistic outlook on the housing market. Therefore, it is critical to examine data from all these different sources, such as Redfin, to obtain a more comprehensive understanding of the current situation. Now, by doing so, you're going to be able to observe the various trends and make more informed decisions. Now, the national median sales prices of homes, it's been trending up slightly. Now, this is aligning with the trend line that's indicating a year-over-year prices. So this could potentially lead to a flattish or even a positive year-over-year figure as long as the trends continues and if interest rates were to fall a little bit. Now, it's important to consider inventory levels as they are tight and have been for a while. Now, this coupled with lowering of interest rates could stabilize this market. Now, in some areas like South Florida, they're doing a little bit better for year over year, while other areas like Idaho and Austin, Texas, they're down about 20%. Now, this is due to various factors like demand, supply, and other economic factors. However, the tight inventory is causing fewer buyers and way fewer homes for sale, leading to a skewed demand-supply dynamic that this favors sellers. Now, it's important to note that there is a lot in the pipeline for home building, and it's the most since 2006, 2007, and could end up on the market by May or June. Now, if this happens, a surge of inventory, we're going to see at the same time buyers reducing from the market and higher rates. This could lead to more pain in the year-over-year peaks. So there are various factors that could impact the housing market in the coming months, like the Federal Reserve's actions, inflation, and the banking crisis. Now, these factors could lead to a reduction in demand, increasing in inventory, and higher interest rates, leading to a more significant impact on this housing market. Now, it is therefore very essential to consider all these factors when you're analyzing the trends and predicting what's going to happen in the future for the housing market. So in conclusion, while the current trends indicate a potentially stabilization of this housing market, it's important to remain neutral and consider all factors from the Bluegrass